only on Bloomberg Quint.
Thanks for joining us. I'm on the sidelines of the Asian Infrastructure Investment Bank Conference in Mumbai, and here with me is Mr. Vijay Iyer, COO and Vice President of MIGA, the Multilateral Investment Guarantee Agency that's part of the World Bank Group. Vijay, thank you so much for joining us on Bloomberg.
Pleasure to be
Quint.
with you.
Let me begin this conversation by asking you about the kind of work that you guys do. What's been your experience in India so far? You try and get some private capital to invest in India and getting from global investors. What's been like?
So the MIGA, Multilateral Investment Guarantee Agency, is a part of the World Bank Group. And we've had an engagement in India for a very long time. And India is one of our key partners, one of our member countries. As far as infrastructure goes, what we are seeing in India is that there is a different level of aspiration that has come into looking at infrastructure. So there is an aspiration to pick up the game in bringing state-of-the-art infrastructure. So just to give you one example, with the GST, the borders between the states have all gone away. So it's one big national market. So the logistical facilitation and the movement of goods and freight has suddenly taken on a very big development dimension. So that, and if you look at the focus on renewable energy, the electric vehicles, the push to build high-speed rapid transit systems, high-speed trains, etc. So compared to the conventional infrastructure development that we were hearing about in India for all these years, there is a different level of aspiration, and the government wants to step up and move to a different way of providing services and infrastructure. So it also becomes a competitive middle-income economy in the longer run. So that's the shift we are seeing. But it also means that the government aspirations have to be matched with a different type of facilitation and dispensation when it comes to looking at how you can attract private investment. Because these are all very highly capital-intensive projects. And the G20 has estimated that India's deficit in infrastructure investment is of the scale of 500 to 600 billion, of 160 to 170 billion in telecoms and energy, just to pick a few numbers. So to meet that, governments, and particularly state governments and sub-sovereigns and SOEs, have to completely change the way they look to mobilize this level of finance. So I think there is a shift happening, and we can talk a little bit more about what that shift implies for how projects can be financed going forward. But as far as we are concerned, the World Bank Group is concerned, MIGA is concerned, we really want to be partnering India in this higher aspiration because we think it is much needed. Because it is required for stepping up the growth. That's the only way India will grow itself out of poverty. And it is also required for India to be a more competitive economy in the world order. Okay. So I think it's critical.
Okay. So in which sectors would you believe are you're in the business of providing guarantees? Which sectors look attractive to you? Where do global investors want to invest in India?
So we are in the business of helping investors manage risk. So guarantees is one instrument. But in India, we look at it more as credit enhancement, because if you are investing where you have a obligation, you have an SOE obligation or a payment guarantee, then how to make sure that there is an assurance around that payment being made or SOE following what is put down in the contract. Those are the kinds of risks that we help investors manage. The more standard offering that we have for political risk guarantee and so on is not that much applicable to India. It's more for more highly politically risk countries. But the way we see it is that we look at the way in which some of the infrastructure is getting financed. And if you see, there are limits to how much development finance from the World Bank or Asian Development Bank or the Asian Infrastructure Investment Bank can be mobilized for that purpose. So there is an increasing need for commercial financing. And we come in to help that commercial financing, debt financing to take place through the provision of credit enhancement instruments.
Okay. So the infrastructure investment story, Vijay, has been very well known. We've seen, I mean, this excitement happened 10 years ago.
Exactly.
Where the private banks came in, they wanted to fund infrastructure projects. Many people have burned their fingers.
Yeah.
Private players who are in the business of executing this also burned their fingers. What is it, where do you get your confidence from?
Yeah, no,
What do you think are the risks and challenges more importantly?
It's a very, very key question. So if you look at the infrastructure scene in India, a lot of legacy issues. The PPP model had issues. Projects were very highly leveraged. Banks have, there have been serious defaults to banks. So overall, it has been a mixed story. Some projects have taken off, done well, but at the same time, you have had a number of very spectacular failures. So going forward, what is changing? So first of all, I think the government has been reasonably successful in creating some very key reforms. So what are these reforms? One, they have got their fiscal act in order. So the fiscal deficit has been controlled. There has been good inflation targeting. There have been a number of subsidy reforms. So there has been improvement in the nature of subsidies. Quality of fiscal expenditure has improved. So there are a number of areas which have improved in the last 3 or 4 years, which means that going forward there is a little bit more confidence in how the infrastructure space may play out. On top of that, the government has stepped up the public financing of infrastructure. So if you look at the highways program or the energy program, they are stepping up a lot in putting money from the public sector in. So the corresponding signal and the corresponding action from the private sector has to happen. And that is where I think that given all that has happened now and the way the government is aspiring to move to a different way of looking at infrastructure, plus the fiscal federalism part, the states are as much a partner with the center in creating the opportunity for infrastructure investment. So if you look at states like Gujarat or Maharashtra, they are really stepping up creating a favorable business environment, looking to bring investors in. And this is where I think that there has been a shift from 10 years ago.
So when you speak to global investors, what's their broader feeling towards India? Are they conducive towards investment? What is your own view on how the policy environment works and how the investment climate of India is?
I think if I can sum it up in one phrase, I think there is a little bit of a cautious optimism towards India in infrastructure, and that is probably the best way to describe it. There is a little bit of wait and watch to see how some of the reforms play out, whether the policy space in infrastructure. On the execution side, a lot of problems remain. So there are a lot of spatial issues, land, the execution capability of local firms. These are all still issues on the table that have to be tackled. So I think taking the policy reforms, creating a little bit more policy certainty, how contracts will be managed going forward. These are some areas where investors are still sort of looking to see some government action. But I think the scene is shifting more and more to the states and the SOEs and the state governments. And the cities, because that's where most of the infrastructure, if you look across India now, almost 8 or 10 cities are building metro trains. So this was not the case 4 or 5 years ago. So there is a certain shift towards looking at how you can strengthen. So the investors are also looking to see whether instead of only working with the central government, they can start looking to work with the state governments, whether there are more opportunities there. But there again, a lot has to happen at the sub-sovereign level. And we have a role to play in that as well, working with sub-sovereign governments to see whether we can create conducive frameworks for investors to get the assurance they need to come into those markets.
Okay, I have one final question, sir, and this is with respect to, at the end of the day, the proof of the pudding is in the eating. It has to translate into foreign direct investment. You spoke about the infrastructure deficit. What kind of monies are likely to come to India? Can you throw us some numbers?
So Well, that's off the bat. That's very difficult to answer. What I'm seeing is that, particularly in heavy infrastructure like metro trains and transportation systems, there is a fair amount of interest. Renewable energy is another field where we see the aspiration of the government matched by commensurate action in trying to create the infrastructure like solar parks and resolving land issues and payment issues with the utilities to help that sector to grow. So there are certain areas where there is more investor positive sentiment than others. So two areas that stand out for me. One, I mentioned the urban systems. So we are actually in the process of exploring in the state of Maharashtra, supporting the Bombay Metro Urban Transport Project. And that's very promising. There is a lot of interest in mobilizing commercial finance for that. Similarly, if you look at the water sector, there is this big program on the Ganga that the bank is supporting. And there again, there is a lot of scope for private investors to come in. That's another area where we see that things could move forward. Renewable energy is another area. So there is this company called EESL, which is doing fantastic work, Energy Efficiency Services Limited. They did the whole LED program in India. So it is companies like this that are coming up that will take the shift from actually project focus to an institution focus. So over a period of time, if you build strong SOEs, you build strong sub-sovereign,
they will get the funding.
They will get the funding, they'll get the investor interest. So you move away from a very centralized model to a more decentralized, flexible kind of approach.
Vijay, thank you so much for your time.
Yeah, thank you.
Thank you so much, sir. Thank you, sir.